Welcome to Breaking News to Trading Moves. We're starting today with a financial report that, well, it gives a very clear signal about where capital is going in the AI ecosystem. The headline involves SoftBank, and they're reportedly looking at acquiring DigitalBridge Group.
Exactly. And that's important because when most people hear AI, they think of algorithms, maybe the chips from a company like NVIDIA. But those things, especially for training the big models,
Right.
they require a huge amount of physical support.
You mean things like power, cooling?
Power substations, cooling systems, specialized real estate, fiber networks. I mean, AI is incredibly physical.
Yeah.
And this reported deal puts the focus squarely on that foundation.
Okay, so let's nail down the specifics of the report. We're talking about SoftBank actively looking at DigitalBridge Group.
A major player in digital infrastructure, yes.
Yeah.
And the talk is that a deal could potentially close before the end of the year.
And as you'd expect, DigitalBridge's stock has already moved higher on this news. The market is anticipating a premium.
Well, it validates a central thesis in the market right now. The idea that the next big move in the AI trade is into the picks and shovels.
The gold rush analogy.
It's a perfect analogy. Instead of digging for gold, you make your money selling the shovels and the wagons. By targeting DigitalBridge, SoftBank is basically placing a huge bet on owning the shovels, the infrastructure platforms. It confirms the belief that building out this AI infrastructure is going to attract trillions in spending over the next decade.
So if the SoftBank move is the validation, let's look at the beneficiaries. For you, the listener, this is about seeing the broader implications. Who else gets a tailwind from this? It looks like we can break it down into about 3 categories.
We can, and let's start with the most direct one. The digital infrastructure and data center platforms themselves. A potential SoftBank buyout validates these assets, data centers, towers, fiber, as the premium real estate for AI.
So this is about more than just cloud storage.
Oh, much more. This is about massive power density, advanced cooling, things you need for high-performance computing. When a big strategic buyer signals they'll pay a premium, it just raises expectations for everyone. Valuations go up, you see more M&A talk.
So the obvious one is DigitalBridge Group, ticker DBRG, but also the big established players like Equinix, that's EQIX, and Digital Realty, which trades under DLR.
Right, they all hold these really valuable portfolios, assuming this trend holds.
But I have to ask, isn't the data center market getting a little crowded? We hear about new projects all the time.
That's a fair question. And there is a lot of general cloud capacity. But the demand for AI-specific capacity is still outpacing the supply. AI workloads need, 5 to 10 times the power density of traditional IT, so the winner isn't the one with the most floor space.
It's the one with the most access to power.
Access to reliable, cheap power, and the cooling tech to handle it. And that's where companies like Equinix and Digital Realty have a big advantage.
Okay, that makes sense. Let's move to the second group of winners, the asset managers leaning into AI infrastructure.
Yes, so the logic here shifts a bit. It moves from the operational assets to the capital deployment strategy. SoftBank wants to own the platform. But by doing so, they confirm that managing funds dedicated to this asset class is a powerful play. These asset managers are set up to gather trillions in capital and deploy it into building new data centers, new fiber networks, all of it.
So these are the firms raising the money and making the investment decisions that fuel all this expansion. The 2 big names listed here are BlackRock, ticker BLLK, and KKR, which is just KKR.
Precisely. They are the investment pipeline. And that leads us to the third group, which is downstream, the hardware and networking suppliers.
The ones making the actual physical components.
Exactly. It's a classic supply chain. When all this capital is allocated to building out data centers, that money has to flow somewhere. It flows to the companies that provide the nuts and bolts, GPUs, specialized switches, high-speed networking gear.
All essential for the technical architecture. So we're looking at NVIDIA, NVDA for the AI chips, and then Arista Networks, ANET, for the high-speed data center networking. Their growth is directly tied to this build-out.
It is. The demand for their products just accelerates as operators race to add capacity.
Okay, so we've covered the beneficiaries. But in capital allocation, there's always another side to the story. Let's talk about where that investment money might be rotating away from.
Absolutely. When you endorse one type of asset, this high-growth, specialized real estate, it naturally creates headwinds for others. And the first area that comes to mind is the office-heavy real estate investment trusts, or REITs.
So this is a tale of 2 real estate sectors.
It really is. Investors are looking at the high growth potential of digital infrastructure, and then they're looking at the uncertainty in traditional commercial office space. I mean, one is seen as the required real estate of the future. The other is still dealing with high vacancy from hybrid work. Capital moves from the challenge to the essential.
A clear contrast. The material points to office REITs like Vornado Realty Trust, that's VNO, and Boston Properties, ticker BXP.
That's right. The next group is the legacy telecom carriers.
Okay, why them?
Well, a platform like DigitalBridge gets a premium valuation because its assets are optimized for these dedicated, high-capacity AI workloads. Traditional carriers, on the other hand, risk being seen as, slow-growth utilities. That is, unless they can clearly show how they're monetizing their own networks for these complex AI jobs, the market rewards specialization.
That brings up a good point. How is a digital bridge network really that different from one owned by, say, Verizon? They both own fiber.
And that's the key distinction. A carrier like Verizon, VZ, or AT&T, ticker T, is mostly built for consumer or mass enterprise services over shared networks. AI needs something much more tailored. Ultra-low latency, dedicated connections, an integrated approach with the power and cooling at the facility itself. Specialist platforms are built for that from the ground up.
Got it. Okay, so who is the last group on this side of the ledger?
The direct competitors, so other private equity and infrastructure buyers. See, SoftBank is a strategic buyer. Their motive isn't just about the internal rate of return. They're looking to secure a foundational platform for their whole AI ecosystem. And they were willing to pay a premium for that.
Which sets a new, higher price for everyone else.
Exactly. It sets a new benchmark for valuations. So for the financial buyers, the private equity firms, this is a headwind. When SoftBank pays what's called a richer deal multiple, the cost of entry for everyone else goes up.
So the PE firm has to put more capital in upfront, which then compresses their potential returns down the line.
That's it. It just makes future deals less profitable for them. This affects competitors like Blackstone, ticker BX, and Apollo Global Management, which is APO.
So to bring this all together for you, the talk around SoftBank and DigitalBridge isn't just about one deal. It's more about confirming a broader economic reality. The demand for this high-powered physical AI capacity is driving valuations and altering capital priorities in both tech and real estate.
And understanding this move into picks and shovels is really essential. This is how you see where the trillions of dollars in projected AI spending will flow over the next few years. It's not just going to chip designers, it's going directly into the land. The power grid, the physical buildings, and the fiber that makes AI work at scale.
Now, a final thought for you to consider as we wrap up. Given the colossal power and cooling needs of these modern AI data centers and the pressure on our existing infrastructure, what percentage of traditional real estate old warehouses, unused factories, will need to be completely cleared out or retrofitted to serve this new technology economy? The need for space is real, but the requirement for power is paramount.
And before we go, we must remind you that this discussion of market moves is based purely on the analysis and opinion of the author of the material we discussed. This is not financial advice, nor is it a recommendation to buy or sell any security.
Thank you for joining us for this analysis of breaking news to trading moves. We will talk to you soon.